All right, how about now? If this doesn't work, I have no idea. Oh, thank the Lord. All right. So everyone can hear me fine, right? All right, perfect. Back to what I was talking about. Yeah, if you have any questions, feel free to put it in the chat. I'll be happy to answer them after I go over some. I'm gonna walk through the plays I went or I'm currently in, some possible ones I'm looking at, and then why, kind of like my thought process about the whole thing. So, if you were watching me just blatantly curse around, I'm sorry. All right, we'll start with this. Silver. Silver is primarily, I would say, 70% a fundamental play, 30% technical trade play. Fundamentally, silver, if you aren't aware, it is probably one of the most popular raw materials that goes into a lot of the EV plays. So the chips, the batteries, a lot of the components that in electric vehicles, so the Neos, the XPEVs, all the Teslas, all stuff like that. So silver is seeing a huge demand. If you look at the commodity prices, commodities are simply controlled by supply and demand, like a lot of the stuff. So silver, I do like its silver long term a lot. I think it's going to break that 27 range in the near future. But for now, I love where it's at. It's back. So if you think about silver here, it's kind of in these three blocks. Block, block, and it's currently creating another block. So these are the kind of zones it's talking about. Right now it's bouncing between these zones. I was pretty confident the other day that it was going to break back up to that second little pump we had here, the 2560 level. But as long as we hold silver above the 2336, for the most part, that's going to be my pretty much my bull zone or my stop loss on the position, because it's kind of in three separate unique zones. Here's that major demand zone. If price action gets back down to that 2274, it looks like it will find some pretty significant support on the 100 EMA. But I was a little bit disappointed that that breakout didn't sustain the other day on silver. It was a nice pop, but did not hold. And if you want to look at silver after hours, XAG is what the Forex ticker is. So silver is more fundamental than anything, but also the technical setup is here. We'll move on to Costco. Costco is, I actually really like, although it is a risky play, it's a weekly contract. On Friday is the expiration. If you think about Costco, major support here at the 354 level, 355, whatever you want to call it. But I tend to think of it more as a demand zone. So you can even call it like, right, the zone technically like stops roughly there-ish. So this is the zone I was interested in buying back into Costco. I use confirmation from my momentum and my RSI, and then I use my demand zone kind of hold it held. This is a kind of like a tweezer bottom. If you see stuff like this is a tweezer bottom into a demand zone. This is likely going to see a reversal. We didn't have a super aggressive reversal here, but the thing I love about this play actually is the close. This very bullish candle. There is quite a bit of resistance here in the short term on the daily EMAs. But I'm pretty confident with this kind of bullish candle. As long as the market holds up tomorrow, we should be fine. Profit target's going to be, for me, hopefully tomorrow we get back to that 367 range. A little bit of a stretch, but we shall see. At minimum 364.54, which was that pop we had from previously. But I like this zone of where Costco is. UPS is in a very similar situation. Also a pretty significant demand zone here. This very similar setup. I'm pretty confident UPS will not break below that 156 range unless the market obviously tanks. So 156, I'll buy it every single time it gets back to there. I took it a little bit higher this time because there's not a whole lot of resistance. You do have a little bit here at 163, and then the next little resistance pocket right there. But for the most part, it did close. The close wasn't as ideal. But I'm not too concerned as we're still in that demand zone and it didn't actually reject off of one of these EMAs. Whenever I look for plays, I'll scroll through the time frames and see if it rejected on the dot on a specific EMA like this. That's a pretty substantial sign that there's algos buying or selling off of this EMA. So once we broke above that, I was actually pretty confident today that it broke above that, above this resistance, above this EMA resistance. Didn't sustain it though, so we'll see how price action goes tomorrow. Another one, Laser, one of my favorite companies right now. Luminar Technologies, they supply a lot of the components for electric vehicles. Specifically, if you're an OEM manufacturer for Tesla, NIO, XPEV, they provide a lot of the self-driving capabilities. They also have the youngest billionaire in the world, I believe now, mostly because of the stock price. But the setup as well is beautiful. The only resistance right here is this at 39. There was some significant selling pressure here, but the reason why I still am confident is because we found support back at that 35.20 range, and we closed on a pretty bullish 4-hour candle. It's just pretty flat after hours, so we'll see how it fares tomorrow. But for now, this is a pretty bullish setup. Anything above that 38-48 range is likely going to run back to 42 and then back to all-time highs. So pretty confident. I'd say this is one of my more confident plays going into tomorrow. Confidence is key with trading. Remember that. All right, Clove. So people, you probably might not have heard it if you've heard of IPOC. That was the SPAC before this became a thing. IPOC is being pumped by quite a few trading groups, especially Atlas Trading, which is like a huge trading group. So I was playing based off of that as well as the technical part of it. So as you can see here, pretty significant resistance back to that 1350 range. Broke out of it, obviously, the whole SPAC thing, and then we had some selling pressure. Not surprising. And luckily we are finding support back here at that previous resistance turn support. The 100 EMA is finding support as well, not quite down there. And then the momentum and the RSI are pointing towards the bullish direction. And there's a little bit of a squeeze starting on the daily. So I'm liking the direction it's going. A little bit concerned about the selling here after that big breakout, but I'm pretty confident it's not going to break down below this range. That's why I was comfortable adding shares here. So let's see. What else am I swinging? I think that's it. Yeah, I think that's it. Okay. So I'm going to go over, since you guys didn't hear me, what happened today in the market and why it happened. So I was speaking with Tess, and it makes a lot of sense if you think about it. So this violent sell-off here, the reason why I know this was market, institutional, whatever you want to call them, they were basically tricking the retail traders into two things. Well, mostly selling their longs and buying shorts. So buying puts, selling their calls, buying equity, whatever you want to do. So the reason why I know this is, one, these aggressive sell-offs are not normal. Like this is let's see, it topped out at, I'll go to SPY. Topped out at 384.77 and bottomed out at 378.54, which is a very aggressive move for a 20-minute time frame. So the reason why you can judge this is actually this was market makers covering their short positions. So it looks like they had some short positions that were open, but their cost basis was a lot lower than the current price action. So they had to drive price down to cover their shorts, which drove the price back up to where they were. So it's kind of like some market makers or whoever was getting into the market short, but they started getting concerned that the market was going to continue to rise, so that's when they had to drive price action down, cover their shorts, and then price action drove back up. And that's why we had this pump to close, because this. So this was institutional trickery, if you would like to call it. And you can also tell by this. So when you see these volume candles increase as price action gets lower and lower and lower, you guys probably think, when I first started, I think of this as selling pressure is getting stronger and stronger and stronger as it goes down, but that's actually not the case. It just means there's more buyers entering the market. Selling pressure is pretty standardized throughout this, it seems, and then buying pressure accounts for some of this volume. Like the color of the candle is only based on the color of the candle here. Like the volume candle color is just based off of this. It doesn't indicate actually how much selling or how much buying pressure there was. So there was a significant amount of selling pressure, but now once we got down here, the short's starting to cover. Then you have a bullish engulfing candle off of this short position covering. Volume is strong, with a big green candle, which tells me this is a short squeeze. So now they're covering their shorts, people are buying the dip, and that's where we kind of have this continuation of the upside. Not surprised to see the consolidation for the rest of the day, but pretty confident we'll see a green day tomorrow after this this last minute buying pressure. Because this is another, once again, this is another, actually brings me to another good concept. I'll zoom out. So when you think about it, there's two types of buyers obviously in the market. There's buyers, so there's the bulls and the bears. If you are a bear, what you are trying to do is call the top, right? And as a bull, you are trying to find the cheapest price you can buy back in to drive price up. So as bears, you're looking for the top. And the way you find the top is obviously you find where price action is going to reverse. And the way you can do that from just a basic perspective is finding the major support levels, right? So if you look at SPY on the hourly, if you look at the EMAs, here's the EMAs. The two main EMAs that are finding support are the 100 EMA and the 200 EMA on the daily. So support, support, support. Here the algorithms are buying. 200 EMA, support, support, algorithms are buying. Here, once again, price action drove right down to that 100 EMA and was bought up extremely aggressively. So this is a telltale sign that the algorithms are still buying here at that 100 EMA, and that the sentiment of the market is no longer turned, or has not turned bearish yet. This is just kind of a textbook to fake out. So once this happens, if a major support level like 100 EMA on an hourly time frame, which is a decent sized support, that's kind of a signifying factor in a market maker's mind, or the market's mind, that the sentiment has turned from bullish to bearish. So now the trend is reversing. Has not reversed yet. We're still making higher highs and higher lows pretty significantly if you watch my other video. But if this is not broken, then the bears who were trying to call the top here, who were possibly selling their positions here, or were shorting equity, so they were borrowing the shares to hopefully drive price down and collect the money on the difference. If this support doesn't break, then they're going to have to cover their shorts because they don't want to get stuck in a bull market when it's not the top. So every day you see something like this and you see a big pump at close, that's most likely the big bears covering their short positions because they don't want to get stuck in the market like that. It's not like a bunch of people want to buy SPY at 385 because that's almost ridiculous right now. It's more so that people are trying to cover their shorts because the market is continuing in its bull trend, and people don't want to get stuck in that. Does that make sense to everyone? Do you guys have any questions on that? You'll start to pick it up. It took me a while, but yeah, when you see big pumps into close, this is most likely short coverings, and you'll see it quite often actually. And then a lot of times, honestly, if you're in a big bull trend, if they see a nice dump it open, that's just to get people tricked out, like just to mess with people's heads. All right. Highly recommend watching my hedging video because I go over like when I identify how to hedge. But I think it's important to start thinking about hedging. I'll go over like what my view is on the market. The first thing I want to do is do a trend fib extension just to show you guys what our potential profit targets are for SPY. So that is why I ultimately opened my short position last week, or one of the reasons is we were approaching that 1.272 fib level, which is a pretty significant level of on the fib extension. The highest I see the market going before a substantial pullback is roughly the 400 range. SPY, so 400 being, it's going to be a substantial, it's the 1.414 fib ratio. It is I think that would be gaining, let's see, what percent of that? What did we start on the market? That would already be a pretty nice year overall. It's also the 400 level, which is going to be fundamentally just a round number. The market loves round numbers, so 400 is already something significant. And by that time, if you look at the weekly time frame, we will be hitting pretty substantial overbought territory, which if you look at it, every time RSI on the weekly time frame for SPY has gotten above that 75 range, Like here it's at 82.47, huge sell-off. Like on a weekly time frame, this is, let's see what that move would be. Yeah, so that, well, obviously that's because of the virus, but 35%, pretty nuts. And then you go to the same thing down here. SPY gets up to that huge, sells off. I mean, it's not aggressive sell-offs in some circumstances, but you can guess there's going to be some selling pressure. And if it's anything like the market's been the rest of the year, or the beginning of the year and last year, then it's going to be a violent, aggressive sell-off. And then the dip will get bought somewhere down here in the demand zone, 350-ish range. So that is my view on the market. Same thing with NQ. Definitely not going to get in some super heavy short positions, but I will stay hedged until the selling comes. Yeah, see. We've got some upside still until that first 1.272 fib ratio. But obviously QQQ has been such an animal this year, or last year too. All right, does anyone have any questions or topics you guys want me to cover? Bears are buying the new high. So bears aren't buying the new high, they're covering their shorts. So like most like heavy short position sellers in the market are looking for the top. They don't want to be buying close to the top. They don't want to be buying like this is the top. They want to be priced in here because the farther it goes up, like you can call the top anywhere you want. But if you don't call the top and support is not broken on that day, you don't want to risk a several $1 million position swinging overnight or over the weekend or something like that. So they'll cover their shorts at the end of the day because not necessarily because they're bullish, it's just because they don't think it's the top. So that's how they cover their shorts, is by buying back their sold shares. I hope that makes sense. But yeah, you cover your shorts. Like if you think about it, if you buy a stock, you buy it. If you are shorting a stock, you're selling to open. So you're starting the position by selling it. So you're basically like borrowing a share from someone, hoping it goes back down in value. And then you're going to be buying it back from them and hopefully keeping the difference between the two if it goes down in value. So if you cover a short with a buy and there's also buyers, then that's going to lead to a squeeze, which happened with GME. Absolutely unreal stock. Blows my mind. 160. Here was the real short squeeze. Yeah. So if Mike, if you're on here, this was partially a squeeze. Here was the real squeeze, and I think most of the short positions have exited. So that's nuts. Yeah. All right. Any other questions or anything you guys want to go over? I know some of y'all have questions. Don't be shy. All right, there's one more thing I want to cover. Also, if you don't use this software, I know like I preach on it, but this stuff is absolutely unreal. Like you just go to it today, it stocks. You can easily see biggest movers, unusual there's just so many tools. It's like endless possibilities. I'm not going to preach on it too much, but it's unreal what the Traditics software does. But one thing I want to cover. So when you guys are looking for plays, I highly recommend keeping a watch list of sorts. This is kind of most of the stocks I trade, and there'll be some more. What I do is on a weekly basis or a daily basis, I'll just scroll through here. I hate this stock now. It pisses me off. I took profit, like 30% losses here, and just had waited one more day. Okay. Besides the point, I highly recommend starting a weekly watch list of all the stocks you trade. Start learning their behaviors. Start learning what makes them tick, what specific trends, what news, what earnings. Do they have earnings run-ups? Do they miss earnings? Stuff like that. This is going to be a huge asset. Well, that's crazy, actually. I didn't catch that today. And when I'm looking for plays, what I'm doing is I'm just scrolling through here quickly. I'll get to the point where I know what's coming up or what's about to be popular. or what's about to have a good setup. And I just scroll through here and I immediately see it's in a demand zone. I'll scroll to the next one. And this is actually not the layout I'm using right now, so there's not a whole lot of TA or lines written in here. But I'll just go through here real quick and see if there's anything of interest to me. Like Pinterest, that's interesting. That's a very, very, very bullish candle. Bottomed out at 68.65, popped back up to 73.50. Pretty significant volume. The earnings coming up, looks like they're going to beat earnings just based off of that soul candle. Pop over here to PSX, Walmart, WFC, and so forth until I'm looking for a good setup. Same thing I do with my pre-market watch list. This is going to be the sectors, so I'm constantly looking through to see what the sectors are doing. Like, I don't know if you guys watched some of my other videos. I talked about XLF, like double top here. I was like, if you're shorting, if you want to short something over the weekend, I think I talked about it close to back here. Take XLF short. You can take the indices short all you want, like QQQ, SPY, but find a sector that has a potential double top like this. Either short or long the actual ETF or XLF. Obviously, the big names in that are going to be JPM, double top, BAC. Yeah, pretty similar situation here. Back to that demand zone, just rejected hardcore. Wells Fargo, U.S. Bank Corp. So look for these ETFs that have the setups, and then you should be able to find the stocks or potential plays based off of that. Like, for example, here you got the industrials finding support, pretty substantial support on that 100 EMA on the daily, so possibly industrials could be a play tomorrow. Here's a pretty bullish healthcare ETF. Well, that's, yeah, the 90 EMA just got bought up quickly, 0.65%. Not a whole lot of price action or any price action resistance in the next ever. This price action's never gotten up there. So pretty bullish sector. So if you're interested, go find a healthcare company like a J&J or a who knows, McKesson or something like that, and you can add that to your watch list for tomorrow. If we break out of that 118.68 level, then most likely the stocks in that ETF are running. So just something to consider. Like this, materials. This is I actually really like this setup here. This was the previous demand zone. This was that previous demand zone they were in before we had a big breakout. This is a ETF that benefits from the Biden administration. Pretty substantial selling pressure here, but very bullish reversal candle here. So a series of red candles followed by a candle like this is signifying a pretty substantial probability of a reversal to the upside. RSI momentum are cooling off, so this looks like a good setup for the rest of the week and month. So, all right, well, I'm gonna head out. I hope you guys liked it. If you have any questions, feel free to shoot me a message in the Discord if you're in the group, or you can leave a comment on the video. So hope you guys enjoyed it, and I will talk to you guys later.